Hello, let's talk about job costing. Now, remember, job costing is far easier to grasp, in my opinion, than process costing, simply because we can say, I know how much it takes for me to build this car, or I know how much it takes to work on this job, this construction job. I'm building this house, for example. So job costing for some people may very well be easier of the two. Why don't you let me know in the comments whether or not you agree with that. So let's get started. Job costs are customized and separate and distinct. Job costing, every job for the most part is unique. Never ever exactly the same. That is more associated with process costing. A job is different. Lawyers, for example, will have various jobs, and those jobs will be based on the clients that they're working on. Accountants will be the same thing. I have a job to do an audit for this client. I have a job to do this compilation for this client. So tracking your costs based on a specific customized job. And obviously buildings and computer systems installation, those jobs are really good examples of job costing. I thought maybe submarines and cruise ships would be more like process costing, but that's a very interesting point here. But what I will say is, if you can isolate a specific airplane that you're doing for a specific job, you could use job costing to account for the manufacturing of that airplane. However, let's just stick to the most important thing about job costing, is that they are separate and they are customized. They are not unique. They're not the same as everything else. Every single project, every single particular assignment that you're given is very, very unique, very, very customized. So that's important. And installation and auditors and lawyers obviously use job costing. They want to make certain that they can track the cost, because they want to see if that cost for that job is appropriate. Are they charging their clients too much money? No such thing, but let's assume for the sake of costing. Are they charging too much? Are they charging, they're not charging enough? Is the profit too low? Is the profit too high? How would you know if you're doing well this job? So job costing for lawyers, accountants, and others makes it so much easier for them to track how well that particular job is performing. So that's why we job cost. We want to track the revenues that we receive. We want to track the costs, but we want to know how much it's going to cost us, because that's going to tell us how much we need to charge our client. So costing becomes the first driving point of the whole process. We want to know how much it's going to cost. How much is it going to cost for me to build this house for this particular client? A unique structure for this individual person. How much is it going to cost me? If it costs me $100,000, why would I charge him $100,000? You see? So it becomes imperative that you know exactly how much it costs you. Now, tracking direct materials. Again, tracking materials, labor, and overhead by job. Every single job that you have to be certain that the cost associated with that job is being charged to that job, because we want to be able to track all costs associated with the job, compare that with the revenue that we receive to at least achieve our estimated profitability levels. We want gross profit to be 30%. We want gross profit to be 60%. We're not going to know unless we accurately allocate costs to the job that receives that benefit. So the materials that are needed for that job should only be charged to that job. So again, organizations do buy in bulk. And when they buy in bulk, they need to be very clear as to when those invoices are put into their computer system, that the costs associated with those jobs, or that material is applied appropriately to the respective job. We don't want to overstate our material costs in one job and understate it in another job. Why? We want to be able to track our costs, track with our revenues to ensure our profitability is as such, because our financial statements doesn't care about job 1, job 10. All it cares about is revenue. How much revenue did we make overall for the year? Very high level stuff, but managers need much more detail than that. And in this case, we're going to get a truckload of information, a truckload of useful information, so that we know by job how well we're doing. Again, tracking labor costs. Now, direct labor may very well be somewhat different in this case, because we're talking about, let's say, we have a job that requires mostly labor and very little materials, or vice versa, or equally of both. What I would like for you to see is, if you're talking about labor that's associated directly with a job, it needs to be tracked to that job. If you have, in this case, you're manufacturing or you're building a building or a house for a particular client, and you have 5 people working on that job, 4 of those individuals are actually doing the hammering and all of the work, and the other person is doing the supervisory work. How do you know what goes in direct labor and what doesn't? If it's not going to be attributable to the actual project and doing their work and getting the job completed, it needs to be the overhead. And that would be the case when you're talking about manufacturing, or you're building a house or building a ship. How many people will actually impart with hammering and sheet metal and all that kind of stuff in creating this ship or creating this particular house, versus the people who supervise the work, people who schedule the work, people who oversee the process, people, that sort of thing. The people who oversee that particular job are going to be charged. Their labor is going to be charged to that job, but not in direct labor category. So knowing how to accurately categorize your costs is essentially important, because again, we're using this information to make decisions, and if we overstate one area and understate the other, we can make very, very wrong decisions. So allocating your costs appropriately is quite important. Tracking overhead. Again, we know overhead is all indirect costs. It's plain and simple. But what indirect costs are we talking about? Indirect costs could be the people who are involved with the actual building of the house, who supervise, who handle processing the paperwork, who hire the HR people, the supervisors. Those individuals who are not actually in the process of the assembly and of that particular product or that job, then their cost is going to go into overhead, and they're going to be indirect costs. They work on the job, but they're not directly labor intensively creating that particular or completing that job. So they're indirect. So indirect costs are going to be in our manufacturing overhead. So if it's not directly assigned to a job, but it be and so forth, it has to be indirect materials, indirect labor, indirect or rent or depreciation or the rental of such and such are examples. So that's the most important thing, knowing what belongs in overhead. Overhead is going to be always indirect cost. They cannot be directly assigned to a job, period. And I gave you 3 examples. It would be, again, supervisors, maybe quality control people who actually go back and make certain that everything works. And again, if you're manufacturing something or you're creating something very, very unique, and you have to make sure it works, again, quality control people, they're not going to be building that. They're just going to be testing it to make sure it's right. And then you're talking about also rent. If you're using a building or you're using a tract of land, whatever cost, that's going to be indirect because it's not assigned directly to the job. So that's important. Allocating manufacturing overhead. Again, the most important thing is when we're talking about costs, we want to know all costs. The direct costs, that includes labor and materials, and the indirect costs, that includes the manufacturing overhead. But the manufacturing overhead has to be allocated. So if you've got all these individuals working on all these jobs, they've got 6 or 7 jobs they're working on at once. I mean, all these different jobs. Well, part of their time needs to be allocated to each one of these jobs that they're working on. So organizations will have to create a way to estimate how much of their overtime or they're allocating that overhead be allocated to those jobs. How do they allocate it? They can use a predetermined rate. The flexibility is off the charts. The main thing is consistent and it's in sync with the organization and it makes sense to what they're actually trying to do. That's the most important thing. How do you allocate your overhead? A predetermined rate might work. A departmental overhead rate might work. It just really depends. And neither one of these different options are incorrect. They all work very well. It just depends on the organization and what they're trying to accomplish and which one is the most reasonable and the most accurate. Again, we're estimating, so we're not trying to hit the bull point, but we certainly want to get close to it. You know, we're not expecting that we're going to get close to it if we are assuming things that are incorrect. So we have to have logical assumptions, and we have to have them consistently applied, which is the most important thing. So an activity rate, again, you can use departmental rate. It could be based on a predetermined rate. And again, if you your organization can reasonably assign costs based on certain types of common denominators, common things, it could very well be this process is attributable to a lot of labor. The labor rate will be the rate that you would use. You get what I'm trying to say here. There are a number of ways that this can be done. A labor rate could be the activity rate, and that's how you allocate overhead. Or it could very well be a predetermined rate. Or it could be a departmental rate or a square footage rate, all of which are good rates to use so long as the organization can reasonably assume that these measures are best represent that organization in its activities. And your job in the course is to know how to allocate them using the various different types of measures, the predetermined rate or the activity rate, however, whichever rate it is being asked of you, understand how to calculate it. But most importantly, why are we doing this? Why is it important for you to know how to allocate your overhead to jobs? If you're assuming a predetermined rate, if you're assuming a direct rate, a direct labor hour rate, or a certain amount of hours, whatever the measure, understand what that measure is supposed to do and how to allocate the cost. And that means computation-wise, how to allocate the overhead cost. And that's most important. So, wrap it up, I would say all jobs they're going to have their materials, their labor, and their overhead. Those are the three costs associated in job costing. And so, and since we're going to be going through job costing and talking about it a lot, even in other chapters, it's important to know the difference between process and job costing. And if you have any questions about what those differences are and how to make your judgment calls and looking at the different questions that are being asked, by all means, reach out. But for job costing, every single job is unique and different. Unique and different. That's going to be the key. For the process side of things, everything is going to be the same. The same process for everything you make. Mixing is the same. Assembly is the same. You get what I'm saying? Doesn't matter what we're assembling. It's still assembling. Doesn't matter what we're baking. You get what I mean? So that's why process costing is a little different. But understand what those are and how they're relevant, and then knowing the difference and which one applies to what. So forth. So that being said, when a job is done, that means you've done the job. You were hired. I'm going to use accounting because I like the service industry. You can use job costing for service companies. Okay, it's not just for something you're actually making. You can use it for service companies. So if you're an accountant and you have a job and you're auditing your client and your client is happy with the work, you provided them with everything was needed to be done, you assigned all your costs to that job and your job is done, and now at this point you're going to have to close out that job and post your costs and then you're going to have to apply your revenues, or in this case, record your revenues and your receivable. So when a job is done, it goes to finished. And when it's finished, the entry you need to do is going to be reversing it out of cost of goods sold, or reversing it out of finished goods, and it's going to be into your cost of goods sold. And this is assuming a tangible thing is being produced. The same process, somewhat different, is going to be done with a service type of organization. If your jobs are more service oriented, if you're a lawyer or you're an accountant, you're still, once the job is done, you've got the job, you've got the cost, you've allocated your cost, now you're going to bill your client. Okay, the job is done, so now we got to close out that job. And we're going to close that job out, we're going to create a receivable, we're going to record our costs, and we're going to generate our revenue. But the most important thing is when you're producing something tangible for someone and you're actually putting things together in a unique process for a unique particular customer, you're going to create that job, get it all done, move it to finished goods. Once it is completed, your job is done, everybody's happy with it, transfer the products to your client, remove your finished goods off the books, record your cost of goods sold, and you show your revenues and your cash, or your revenues and your receivable. Now, there are times when you have to deal with, you have your overhead allocated. You've allocated overhead based on a predetermined rate. And I'm just using that because it's very, very simple to think about. You've got your overhead and you've allocated based on a predetermined rate, and then when the actual overhead comes in, i.e. costs associated with overtime, indirect labor, and so forth, it is lower than your allocated. Then you have to deal with over-applied or under-applied. When there's a difference between what you've allocated and what actually happened, that's going to be the over or under-applied. And how do you deal with that? Sometimes jobs are completed and the overhead account is decreased by the allocations needed to use the predetermined rate. That means these are estimates. We are estimating what our overhead is going to be. We are just guessing. And when we find out that there's a difference between what we guessed and what reality is, that difference is going to be an over or under apply. Did we over apply? Did we under apply? And how do we record that on our books? At the end of the day, our over or under applied balance has to be moved to the cost of goods sold. So if we have an overhead balance that's positive, that means we over applied. Then we're going to have to decrease the overhead account by $5,000 and increase our cost of goods sold. Again, it's all about if we over or under apply. We have to make certain that our allocated overhead amount nets to zero. And if there's a balance there, that means we over or under applied our overhead. So overhead has to be, and again, it's going to be hitting our cost of goods sold. Either way, it hits our cost of goods sold. The question being whether it increases our cost of goods sold or if it decreases our cost of goods sold. So if we over our overhead allocated, and I would like to see an example, but if you have your allocated amount of your overhead of $10,000, but then actual comes in and it was actually $15,000, your debit is going to be $10,000, your credit is $15,000. You have a negative number in your overhead. That negative number in this case has to be, again, debited, and then you take and credit your cost of goods sold. But what if you had your predetermined rate of $15,000, and then we credited, I guess, $5,000? That difference of $10,000 has to zero out in our overhead allocated. So we have to credit our overhead allocation, and we have to debit our cost of goods sold. I think the most important thing with this particular transaction is to show you in an example. And I think there's an example in your textbook. But again, what we're trying to do is we estimate what our overhead is going to be. When we actually allocate those costs, it has to net to zero. If it doesn't, we either over-allocate it or under-allocate it. In either case, we have to record it against the cost of goods sold. I hope that job costing will be much, much easier for you to grasp as you proceed through the course, because job costing is, I would think, the most important part of a managerial accounting, and it's the best step to work on because it's very easy, very straightforward to understand for students. Students seem to understand job costing a little bit easier. So I would suggest really, really digging into job costing, why it's important, and what type of things that are happening when you're recording entries, when you're allocating your overhead, or using a predetermined rate, or using an activity as your basis, and then what happens when you actually allocate the overhead when there's a difference. What that means is you either over allocated or under allocated, and essentially you have to zero it out and take the difference and post it to cost of goods sold. I hope this video was helpful to you, and if you have any questions, as always, please reach out. Thank you.